Hey everyone, welcome back to the channel. Today we're diving into a topic that can seem overwhelming at first, but I promise it's simpler than it looks. How to invest in stocks for beginners. Whether you're looking to build wealth, save for retirement, or just get started with investing, understanding the basics of the stock market is a great first step. So if you've ever wondered how to start investing in stocks, this video is for you. Let's get into it. Step 1. Understand what stocks are. First things first, what exactly is a stock? When you buy a stock, you're buying a small piece of ownership in a company. So if you own stock in Apple, Tesla, or Amazon, you technically own a tiny part of those companies. As the company grows and becomes more valuable, the value of your stock can increase, which means you could sell it for a profit. Think of it like this: you're investing in a company's future success. If the company does well, you benefit. But if it doesn't, there's a chance you could lose money too. So understanding the company and its potential is key. Step 2. Set clear financial goals. Before you even put $1 in, you need to ask yourself why you want to invest. Are you investing to build long-term wealth, save for retirement, or maybe for a big purchase down the line? Your goal will shape your approach. If you're investing for the long term, say retirement or future wealth, you'll have a different strategy than if you're investing for short-term goals. Define your goals so you know what you're working toward. Step 3. Learn the different types of stocks. Let's talk about the types of stocks. There are a few main types, but here are the basics you should know as a beginner. 1. Common stocks. These are the most popular. They represent ownership in a company and can pay dividends. 2. Preferred stocks. These usually pay higher dividends but don't offer as much growth potential as common stocks. 3. Growth stocks. These are stocks in companies expected to grow faster than the average. They might not pay dividends but could offer high returns over time. 4. Dividend stocks. These stocks pay out a portion of the company's earnings to shareholders regularly, making them popular for steady income. Knowing these types can help you make more informed choices that align with your goals. Step 4. Choose a brokerage account. To buy stocks, you'll need a brokerage account. Think of a brokerage as the middleman between you and the stock market. Today, it's super easy to open an account with an online broker, like Robinhood, E*Trade, or Fidelity. When choosing a brokerage, look for things like low fees, an easy-to-use app, and educational resources. Many brokers offer paper trading or virtual trading options so you can practice with fake money before investing your real cash. Step 5. Start with index funds or ETFs. If you're new to investing, a great place to start is with index funds or ETFs, which stands for Exchange-Traded Funds. Instead of picking individual stocks, which can be risky, index funds and ETFs allow you to invest in a whole group of stocks at once. For example, an S&P 500 index fund lets you invest in 500 of the biggest companies in the US in one easy step. These funds are usually low-cost, diversified, and provide exposure to different industries. They're often a safer, beginner-friendly way to get started and grow your wealth over time. Step 6. Decide how much to invest. The big question now: how much should you invest? The general advice is to only invest what you're willing to leave untouched for the long term, ideally 5 years or more. This means not putting all your emergency savings into stocks, as the market can go up and down. Start small if you need to, even if it's just $50 or $100 a month. Over time, consistency matters more than the amount. Just remember, the earlier you start, the more time your money has to grow. Step 7. Build a diversified portfolio. One key principle to remember as a beginner is diversification. This simply means not putting all your money into one stock. By spreading your investments across different companies, industries, and even types of assets, you reduce your risk. For example, if one stock goes down, others might go up, balancing out your portfolio. ETFs and index funds are great for this because they provide built-in diversification. Step 8. Focus on the long term. Investing is a marathon, not a sprint. The stock market will go up and down, but over the long run, it has historically grown. The worst thing you can do is panic and sell everything during a dip. Instead, focus on long-term goals, and stay patient. One approach to manage your emotions is called dollar cost averaging, investing a fixed amount regularly, regardless of the stock price. This way, you buy more shares when prices are low and fewer when they're high, averaging out your costs over time. Step 9. Keep learning and adjusting. Finally, investing is a journey, so it's important to keep learning and adapt as you go. The more you understand, the more confident you'll feel making decisions. Follow financial news, read books, watch videos, and learn from your experiences. And remember, even seasoned investors are always learning. Financial success is a process, and it takes time to build wealth in the stock market. And that's it, a beginner's guide to investing in stocks. To recap, start by understanding what stocks are, set clear goals, choose the right brokerage, and consider beginner-friendly options like index funds and ETFs. Stick with it for the long term, keep learning, and don't panic during market swings. If you found this video helpful, be sure to like, subscribe, and hit the notification bell for more content on investing and personal finance. And let me know in the comments, what's your biggest question about investing? I'd love to help you on your journey. Thanks for watching, and I'll see you in the next video.